one struggle we have with some of the campaigns that we work on is when we talk to like investor, they say, okay, I'll invest, but not now. And then what happens is that then that lead lingers. It lingers. And then you end to a point when you go back to them, you double back to them, say follow up. They say, oh, sorry, plans have changed. So I think one thing that needs to be solved, and I may have a few ideas, but maybe I can talk about this offline, just to hash them out, is that we have to create some urgency, apart from the perks themselves or changing the perk, because then you have to get into SEC and FINRA approvals. But within the campaigns of how do you create that urgency so that they act now?
Hello, everyone, and welcome to another episode of Test, Optimize, and Scale. We have Manoj Grover here, one of the top names in IR, investor relations. He's the co-founder of Public Yield Capital. I've had the opportunity of sharing panels with Manoj. I've seen him at everything from microcap to investment conferences. Again, he is an authority when it comes to how to nurture, how to engage investor conversations compliantly to get them to their goal. Manoj, thanks for taking the time to join the podcast here today.
Jason, thank you for the opportunity, and you make me sound more important than I actually am. So I appreciate that.
I just repeat what I hear on the streets here at the conference room floor, and that's what is said, and I do mean it. Want to start out with your story, your background, so the audience understands as well too. So thought we could kick things off with, where did it all begin for you?
Well, at one point, many years ago, I was twinkle in my dad's eye. Is that far back you want to go, or like just?
That's a new record here on the show. Over 155 episodes, but that's the first time we've gone that far. But sure.
Far back. I don't think I'll bore your audience with those stories, but so I was born in Montreal, born and bred, family of entrepreneurs. My father came to Canada in a very in the late 60s, and basically it's typical immigrant story, entrepreneur. Started, and we were one of the largest hand tool suppliers. So in those days, what is currently known as Lowe's, we were one of the largest suppliers to them in the late 70s, early 80s. Unfortunately, his health didn't continue, and that business went down. We're struggling over the years, but he had tenacity, and he never gave up. And so then we became the largest dollar store chain in Canada before Dollarama, which is a major $1 billion KKR-based company, took over the market. And so that got me, let's say, the first taste of entrepreneurialism. And after that business, my dad got into manufacturing imitation perfumes. So completely businesses that have nothing to do with each other. And unfortunately, when he passed, that's when I started becoming my own business person. At the age of 18, I ran my father's perfume business. We went from 18 SKUs to over 100 SKUs, selling in 20 countries worldwide. I got the privilege of traveling throughout the US, Canada, South America, and you get a real appreciation of how big and diverse the world is, especially for an 18-year-old. For me, I was excited at a credit card and a car, and everything was paid for. So it was that was my exciting moments where my peers were still in school. So I got to really learn about life by pounding the pavement. Unfortunately, because I was 18, I didn't have much business experience. So as much as it was fun, didn't understand about how to grow a market, product market fit, or even basic financial accounting. I could do bookkeeping, but to understand how to do dealing with, let's say, work in progress, supply chain, inventories, and then product costing, these things I didn't know. As a result, we had products that were very expensive to make, but we weren't making much money on them because they were bestsellers and we priced everything the same. And those were cheaper to make, were not selling as much. So as a result, we were bleeding. And this is in 2001 when the first tech bubble burst. Sure. My client said we need to consolidate, or basically he has to start his own. So he basically bought me out. So I technically had an exit. And I could proudly say at the age of 22, I didn't go bankrupt. Business sold out, and then I decided, okay, I want to get into capital markets. Didn't know how. Growing up in Montreal, the capital market business is not as big as New York or Toronto in Canada. As a result, got into financial services and insurance business, pure retail, pounding the pavement, building personal relationships, selling life insurance and mutual funds. Then I moved into banking, structuring financings for multifamily homes, and I had a portfolio of residential homes that I had to finance in the territory I was given, about a $500 million portfolio that I had to manage and refinance and generate revenue out of. But once you're an entrepreneur, it is really hard to fit in a corporate box. So in my mid-30s with 2 kids and a mortgage, I decided to go back to school, went to do my MBA, and then I learned about crowdfunding in a new ventures class. And I said, I had an aha moment. Yes, that is my entry to capital markets. So over the next few years after I completed my MBA, which is now 2016, as you say, I started 2001, sold the business, 26, so 15 years later, joined a couple of tech companies that did the fulfillment, and you've heard of the brands, CoreConnex, Dealmaker. I got to work with Eton at Dalmore, and just started cutting my teeth into the business. Worked with a lot of different also startups as advisory for sales, business development, until I had an opportunity to meet who's my current co-founder, business partner, and then realized that this is I really enjoy on the front end of this business, meaning dealing directly with issuers, trying to come up with strategies to help them get eyeballs. And the marketing side is very sales oriented, I believe, because essentially it is branding and pushing on. These investors are clients, right? So how do you build up this funnel and pull clients in? So I joined his firm. So my partner used to be my boss, and I took over sales. And when COVID hit, so at that time his firm was focused solely on public companies. So once again, tried to get into capital markets through crowdfunding, but when I joined his firm as head of sales, we pivoted to the public markets, which was a great learning experience for me because that's the foundation of what all the crowdfunding rules have been based on. And from there, when COVID hit, we had to pivot. So crowdfunding was that big whale that we could pivot to, and it basically saved the business. And after about a year, joined forces with him and rebranded to Public Yield Capital. So Public Yield Capital was started in the end of 2020, beginning of 2021. And we were essentially a similar firm to yours, specializing in the marketing side, the lead generation side, and the branding side. And as time goes along, you learn a lot of things. You learn what is the market like, how all the parts fit, from the different broker dealers to technology to different players to the transfer agents, and how the whole ecosystem functions in a very, let's say, cohesive manner and a holistic manner. And we found one of our clients said to us, like, we're generating them leads, but they don't know what to do with them. And it was not more of an aha moment, just realization there's a gap. Like, there's actual gap. These leads are coming in. Some of them are investing, but there's a whole pool of them that are just being basically what I like to say, abandoned cart. They've abandoned the cart.
Yes.
They go through the process and then they just don't do anything. And it's not about even them not investing. What the biggest issue is you don't even know why they left or why they abandoned the whole transaction. So for this specific client, we had 2 sales reps that I'd hired who were former IR specialists. I told them, stop doing what they're doing, brought them onto this project, and that was the genesis of our investor outreach desk in 2021. And since then, we've been doing less branding, less marketing, even though we know the business and it's still part of some of our offerings, and focusing more on creating basically pivoting from a service business to more of a product business, providing investor relations support to public and private companies, working with data partners to help enrich and append this data so that we're better targeted, creating feedback loops to you, like teams like yours, so that you're generating these leads. My team interacts with them. We collect information, and that information allows you to optimize your efforts.
Yes.
And so therefore having a better profiling, optimizing your profiling, creating better lookalike audiences, and this basically creates a self-fulfilling prophecy. And hopefully the client benefits at the end.
And the space is absolutely in need of that. You know, looking at digital analytics, if you're getting a 2% conversion rate, Google says an average is 2.35, you're in a good place. If that's on a Reg CF campaign, hey, you're leaving 98% of people on the table. Or even worse with Reg D and 506C going after accredited investors because it's a larger funnel. So mid funnel is maybe a lead sign up. I mean, you want to do whatever you can to get more of that audience. Even if you see a 1% difference in conversion rate, that can mean the world in terms of your results.
Yeah, for sure. I know you're a baseball fan. I learned that so am I. A former Expos fan, actually a heartbroken Expos fan, and shame on Lou Monday and Rick Monday, the Dodgers. Now going back like 40 years. But the reason I'm mentioning the baseball and to relate to our conversation, baseball is the most analytical sport there is. You can almost measure anything. You can measure a batting average with 2 strikes on a Sunday at 3 p.m. Literally, I bet you there's a statistic for a baseball player of what their batting average is at that exact moment. So you can really drive down into the minutia of how something should perform. But there's also an eye test. And I think when you're looking at our business as well, as deep dive you can do in the data, there is a nuance where we could be completely digital, meaning that you have all your data for analytics, you created your profiles all online and have this whole funnel flow. Having that human touch, that soft touch in the sales process, it brings that quote unquote eye test that we're referring back to baseball, where you can just see the swing, find there's a slight hiccup in the swing, help them fix that, and hopefully you get more contact on the ball and you get it in play rather than fouling away. Hope that was a good analogy for baseball, that ever worked well.
It was a great analogy. You know, it takes us a bit away from Moneyball and incorporating the eye test and other things incorporated. But yes, the only way to measure is with numbers. You got to be able to look at some of the stats for us on the advertising side, as an example, and driving traffic into content funnels. You know, the CFO, the founder who's spending on a campaign only wants to know what's our return on ad spend, what's our return on marketing spend, what's our cost of capital if it's an investor acquisition campaign. But we have to look at all the metrics in between, because if we improve the upper funnel metrics, the cost per acquisition of each new investor, return on ad spend are that much higher. And again, I wrote an article, Marketing Does Not Work, the truth, because there's few products that you would buy if there was, you know, a 2%, 0.2% success rate. You're playing for these small pockets of performance. So as a marketer, I would say anything you could do to increase conversion rate is a good thing. Incorporating an offline touch, wow, what a luxury that is, especially at scale, and being able to do it across volumes of leads, volumes of visitors, volumes of abandoned carts, being able to know there's humans on the other side, being able to build rapport, being able to give more information about an offering. Only what's listed on the page, of course. It's the same information available to all issuers per the rules. But hearing an individual say it can make all the difference.
What many founders forget is that there are people who are buying you as the business, and at the end of the day, they buy the people first, then the business itself. And unfortunately, I think the ethos of the industry is that you leverage digital marketing and it's automated and it's efficient and it reduces costs, but people still want to talk to human beings. Like I buy most of my stuff on Amazon now. I love the convenience. I get the product the next day, or basically whatever my Prime allows it to deliver in. But if I have a question, I find the customer service, I click, call me back. I still need to speak to a person when there's an issue, when I have any form of doubt in the transaction. If it's basically a simple widget that I know I'm going to get batteries or cell phone wires or UPC plugs, boom, really quick transaction.
Yep.
And what people don't realize is capital markets is complicated. Like these sub docs that have to be filled out, they're like legal documents that this thick, and they're complicated documentation. And we're trying to convert it into an easy peasy e-commerce transaction. That is a big feat. So if they're in this whole process, like you can, like I would say, if you say for marketing is like taking the horse to water, but you cannot make it drink. So, and then you got to find out why it's not drinking. That's our job. Our job is to find out why you're not drinking the water. Is it the color too bad? Is there a predator across the other side that's scaring you, or whatnot? And so that information.
Yeah.
No, sorry.
You need that. You know, so many times we operate off assumption, and we always have assumptions as the agency going into a campaign, but you need the data to show you what's working. You need to be able to run the tests, and everyone's heard me say it, but use data-driven decisions from there. So having that feedback, having that closed loop system from the end investors, hey, these are my concerns. It probably helps you shift and optimize, whether it's the offering page, the traffic drivers such as advertising and outreach to the offering page, the content that prospects are being presented in the follow-ups. And, being able to fill in some of those gaps. I mean, again, we want to do anything we can to build more trust, build more confidence from those investors. So what better way to have an actual individual there? That's the way the Reg D campaigns work. Credit investors, high net worth individuals typically want to speak to somebody. We've worked on campaigns, some of the largest ones that will see digital conversions and have their funnel set up to do so. But most Reg D campaigns, they're lead gen, get someone on the line, have them walk through it. And working in digital, I have to say, people don't believe what they see online. They don't trust what comes across them on the internet. So the more social proof, the more third-party validation, the better. The more customized, personalized experiences, such as a call with you, with one of your IR reps, the more they're going to have an organic connection relationship to the organization, to the issuer.
I don't know if I've told you this in the past, but have I mentioned to you what are the two most common questions we get from potential investors?
I heard you say one, and would love you to share with us.
So the first one, which is funny, but it's actually true, investors ask, why do I have to give my social security number? The government will get it. and it's funny, but because these, especially on the Reg A, Reg CF side, we're not dealing with sophisticated investors. They wonder why you have to give personal information up. Like, it's all about privacy, right? Especially in today's world where everybody's worried of getting hacked and their personal information being stolen. My team assures them that the government already has it because they're the one who issued it to them. So it's, and then we pivoted to the importance of it for KYC, meaning know your client requirements and anti-money laundering requirements. The second most popular question is, when do I get my money back? And I think that is one of the most important questions, because as you're mentioning about CEOs and founders talking about your ROAS or return on investment, they need to also understand that these individuals are putting their hard-earned money into your business. There's an expectation.
Yeah.
There's an expectation that you communicate with these investors. There's an expectation that you keep your promise, keep your word. And if somebody's parting with their dollars, they have an expectation of getting a return.
That's why they're doing it.
So that's exactly why they're doing it. And unfortunately, I think many founders forget that, right? Because it becomes just a transaction and they don't meet that investor face to face. So as a result, because when you don't see somebody face to face, it is hard for building that rapport. So inverted to what we do on a day-to-day basis of building a rapport of the company to the investor, there has to be a reversal and same type of attitude from the investor side to build a rapport, or the CEO to build a rapport with the investor on the other side, right? So like the right hand helps with the left hand, knows what the left hand is doing. And if that question can be answered better or with more confidence or with more clarity, I do believe many of these transactions will do better than they have in the past. And I know you've spoken to me numerous times of some of the data of how many campaigns don't do well.
Yes.
And I do believe one big factor, apart from the budget side, the market condition side, the fact is that many founders don't think about, okay, how, if I take these people's money, how do I give it back to them in a confident manner?
How do we grow the valuation? How do we have a liquidity event? How do we show these investors returns?
Yeah.
So I want to go back a step to the data, because I could do a whole podcast on how startups can succeed. And, there's a lot of moving pieces. I would be, remiss to not ask about the type of results that you see. If I was in the audience, I'd be curious. Okay, how does this improve performance? If you speak to 100 leads, what are your goals? What are your anticipations? It's, of course, a range. I understand it's not the same results for everybody. I know, not every deal works. And anyone who says otherwise is, just trying to make things sound pretty. If you look at the stats for how many deals are funded at the VC level, how many deals, the Reg CF, Reg D, Reg A are successful, it's small. It's, for each of the ones I mentioned, and to get to, 7-figure type increments on under 10%. So please understand the audience isn't expecting, guarantees or anything like that. But what type of metrics do you shoot for? What should founders be looking for if they're running an IR program, whether it's with you or, maybe they're bringing some team members to do just this, whatever it may be, we want to make sure it's educational. What should they be playing for?
Well, so the priority first is our job is to learn their business the best to our ability. Now, once again, we're not inside the organization, but we must build a knowledge base so that there's any potential question that an investor asks, we can do our best to answer. And if we can't answer it, then at least we have a communication channel with the client, with the founder or the other founders or representative, so they can respond back in a reasonable amount of time. Meaning not a month, though I make a couple of days at worst just to answer their question, because that builds confidence. Say, hey, because nobody expects to know everything. But if you need to get an answer, you get the answer out as fast as possible. So setting up SLAs like that, now as may not be as statistically sexy as meaning dollars coming in per investor or the delta between those who we have and not spot, but just keeping those types, like I said, keep your word and keep your promises of communication and doing it in a consistent manner is so important. That I would like to set that up front, because sometimes people you have so many questions, you get overwhelmed. But we're organized enough and we set up enough follow-ups to make sure that we cover everything, because you're setting an expectation with an investor, potential investor. You fulfill it, trust gets built. Now, we've had campaigns where it's flopped, and we have had other campaigns that have done well. So if I give you an example of a campaign, well, should even take a step back before I give an example. One thing I want to emphasize on is that we don't solicit the investor. So we're not licensed. We're not broker dealers. We cannot give a potential any advice about the investment or discuss the quality of the investment. And the only thing we can discuss is information that is available in the offering circular, either the Form A or Form C, there's Reg A, Reg D, or even the PPM for the Reg D and the filing of the Reg D, as well as what is available on approved marketing material, being on infographics, any decks, the website, all that marketing collateral, plus the circular, what comprises of what we're allowed to say. That's the sandbox we play in, and we don't say any more. If an investor does ask for their opinion, we have to advise them that they need to speak to their financial advisor or legal counsel to do the due diligence for the quality of this investment based on their requirements and needs. So that is another important thing, and what that does protects us as a partner, and it protects the company as well. from there, we've had successful campaigns where, like, we just had one CF that ended recently. Now they're at a pause because they're waiting for their qualification for their Reg A. The metric we use is funds supported. So first we look at the amount of calls we've sent out. The pickup rates. Pickup rates paramount, because if you're not speaking to an investor, what's the point? We're closer to 20%, whereas more call centers are like around 5 to 6% in mass volume, because of quality of work that you do and the quality of leads that come in with the contact information, they're more likely to pick up. So we make sure that the branding of when the call goes out, like, we don't say we're Public Your Capital, we're company ABC, we're an extension of their marketing team. Make sure everything is branded, from the voicemails to the prompts when they call back, to the caller ID, that, hey, this is the issuer and it's consistent. And as a result, we have a very good pickup rate. From the pickup rates, you look at engagement, meaning how many touch points did we have with that individual. And what we've found is that an average call that's between 7 to 7.5 minutes with 2 to 3 touch points has been a successful investor. Mm-hmm. Now, that it's not guaranteed, but that's a consistency we've seen. 2 to 3 touch points and about 7.5 minutes conversation. Some are less, some are more. Others, you have 5 touch points and they never invest. The value for measuring the engagements is that you want a quick no, because you could have these people in your funnel and you're retargeting them over and over again. You're sending them your nurturing emails to keep them abreast of what's going on. Yep. But they're just kicking the tire. They're not serious. They're not interested. If we can find out that these people are not serious, then we can provide that information to you, and then you stop wasting dollars on them. Every dollar saved.
Change up to other audiences.
Exactly. And so that also helps you optimize your profiling. So that's another value add, I guess, we can help provide. And that, in collaboration, let's say with this, work in a project with you, you can give us the metrics on what dollars, how they're pivoted, and so on and so forth. But that's more anecdotal than actual measurable, because we don't have access to that on real time. And going back to the other client that I was just mentioning about earlier, that finished their CF, now waiting for their Reg A, we said funds supported because, once again, we don't close, we don't sell securities. And of their 5 million, my team had spoken to $2.2 million worth of investors. So meaning that throughout the entire campaign, whoever we spoke to net yielded 2.2 million. So of the 5, that's like 44%. Now that's a very high number. That's a very high number. Not all campaigns are like that. Some campaigns are like half of that or 10% of that. But for, I think, the value we provide, that's a great ROI.
Significant. And I mean, you touched almost half the investors there with 40%. That's massive. And you said it's 2 to 3 touch points. You're reaching out at least 5 times if you're not getting a hold of them. 7.5 minutes on the average conversation, all as part of this. 20% of the leads you're speaking to directly that are sent your way.
Yeah, approximately. Now, to add the touch points, what would that entail? Okay, you have 1 point, let's say a touch point during the campaign, early in there, we call them. Say, hello, Mr. Fishman. Thank you we saw that you showed interest in this offering. Do you have any questions? So that's an early touch point during while they're early in the funnel. Then they may ask for an email to summarize their conversation and summarize and ask for some documentation, for example, link to the offering circular. They may have asked a question for financials. So then from the financial side, we'd go on their website, find the link and send it to them. The easier we can make it for them, the less resistance they have. And then finally, if they're on the portal, which could be Issuance, Dealmaker, Delmore Direct, or any other platform that they're going through, because my team is now experienced on providing not technical, but to see customer support on all of these. If they have an issue on the platform itself, filling out information, that could be another touch point where the risk of abandoning that card could happen. So that also helps them push them across the finish line. So these are like examples of touch points that we have with our clients.
The touch points. When I was first taught about advertising, programmatic advertising, you're buying across thousands of websites or AI, machine learning towards the top performing segments. You're looking for these pockets of performance. You later optimize towards those variants that are driving. I was told the secret is it's all in the retargeting, meaning people don't convert on the first touch point. You see those stats online, 7+ touch points, 17+ touch points. It's all in the follow-up. It's of course all in the follow-up for sales, for business development, for selling securities, for informing and following up about securities. It is all in the follow-up. There's a stat that I use in workshops at times, typically more for an outreach conversation, but I find it very interesting. I can't share it enough. 48% of salespeople never follow up with the prospect. So this is you driving people to the offering page and that's it. 25% of salespeople make a second contact and stop. 12%, 3 contacts and stop. Only 10% of salespeople make more than 3 contacts. Meanwhile, 2% of sales are made on the first contact, 3 on the second, 5 on the third, 10 on the fourth. 80% of sales are made on the 5th to 12th contact. So that's what's in the background for me every time I hear you talk about your offerings. It's the follow-up. You're going over the information from the offering page. You're showing them that you're real. You're making it as easy as possible for them to move forward. And it's that follow-up that gets them closer and closer to action, and then finally to take that action. I mentioned 2% as a conversion rate for digital earlier. And, maybe 5 to 10% of people are interested. Hey, I'm going to do this, or, let me keep following it. And there's a conversion rate all the way through. The whole marketing funnel concept, taking audiences from awareness to consideration to intent to conversion, many times on Reg CF campaigns, repeat conversion, and then advocacy, peer-to-peer marketing at the bottom. So all of those follow-ups, I envision a stronger conversion rate occurring at each one of those stages in the funnel. And that's what you guys are providing directly.
You remember the play Death of a Salesman?
I actually haven't.
So it's a very old play. They made a movie of it as well.
I've heard of it, by the way. I've never seen it. They performed it at my local high school, but I've never seen it.
I have white hair, so basically I'm old enough to actually have seen it when I was in high school. It's true. Salespeople don't exist anymore. That hard salesperson that all he does is sell. Like remember Glenn Ross always be closing. That doesn't exist anymore. It's now. Everybody in an organization is a salesperson, and it's soft sales.
Yes, education.
Exactly, because at one time in my life, for 2 months, I was a car salesman. I was a pretty crappy car salesman. I was really impatient. I hated waiting because I'm a hunter, so I loved going out, meeting people, shaking hands, and hunting for my business. So sitting in a car while I was looking between jobs or between careers, and I'm sitting there waiting for a person to buy a car, it was very frustrating. But one thing they did tell me was that when the potential customer comes through that door, they know more than you and I. Why? Because they have had time to research that car that you're selling, as well as every other car in the sector.
Yep.
They know every single type of engine, the torque rate, whatever data is there about the vehicle, because they're going to use that information to leverage the price and negotiate. So I can't compete with that. So as well, what you become is basically a custodian you're no longer a custodian of the information. You become a decipherer or basically a tool to help them understand the information. And I think that is true. Even what we do is there's a lot of information out there in the market. They're apart from what the issuer is providing. There's macro level of economics. People understand about industry. Like as much as we deal with non-sophisticated people, those individuals are smart. Right?
Yes.
They're surviving their lives on a day-to-day basis, and you have to respect that. So I think providing that soft sales approach, because everything is sales, but the education approach, and once again, I said earlier, keeping our word in communication, setting proper expectations, delivering on those expectations in just on the communication side, I think it becomes really, really important.
It's a must, and it's something that many issuers are missing. I mean, Reg CF, there's a lot more data available than Reg D and Reg A. I always say, and it's true with Reg A as well, the bottom 50% of campaigns are stagnant. The top 10% are moving. If more groups, had this in their plan, if more groups had a strategy for the marketing campaign of their capital raise as a whole, and for the IR process, I believe there'd be a higher success rate. And that's why it's so important that you share what you see working directly in the space right now. I mean, there was only 11 campaigns in Reg CF, according to Kingscrab, that did the full 5 million in 2023. You're sharing the formula for how to get there.
I find CF's harder than Reg A's. Reason why they're smaller dollars. The overhead cost is almost the same, meaning not to launch it, but on the marketing side. And you're trying to get lower dollars converted. Plus, there are more restrictions. Like, for example, how you can communicate. You have to be affiliated with the broker-dealer. The broker-dealers are ultra-conservative because it's their butts on the line all the time for compliance. And then you have the discussion boards. So I personally believe that CFs are even harder to deal with than Reg A's because of all those other factors. We cut our teeth on the Reg A side of the business, but now we're slowly learning how to fit in our space between what the requirements are, regulatory requirements are, what the infrastructure is, and say, okay, we fit in our space. So you're right. It's there are very few campaigns that get that hit the $5 million mark, but I think it's a very difficult program to run. I don't know what's your opinion on that, but I find CF's harder to run than Reg A's.
With a Reg A, you need a large audience or, a groundswell of initial activity. There's a crowd effect that's occurring on any of these rounds that are really looking to, process investments digitally, digital marketing exercise. So if you come out of the gate with $1 million, $5 million from First Degree Network, from that existing audience, or from a list of publishers who are talking about you and producing investments in a quick succession, yes, going from 5 million to 10 million is easier on a Reg A than going from, let's say, 500K to $1 million on a Reg CF. The first 100K on a Reg CF, oof. Same for Reg A. You have to get past those milestones. Of the data that's available for campaigns that have reported on Kingscrab for Regulation A, 50% haven't passed that $1 million mark. The top 10% have passed $15 million. Substantial. But imagine going through all that paperwork. I mean, the costs are higher. There's a lot more at stake on the Reg A in general. And not doing $1 million. I mean, you could do up to 5 million on a Reg CF. So, what's the point at that point? Yes, third-party validation, social proof. Everybody wants to see that line around the block. If they get to a campaign and there's $3 million raised, and then a few weeks later they go back and there's $5 million raised, and then a month later they go back and there's $10 million raised. A lot easier to get that audience to convert than it is if it's a Reg CF or a Reg A plus that is, plateaued at 300K or, 1.5 million for that matter. But as you get to those bigger arenas with the Reg A, it can become, I don't want to say easier, but definitely simpler. Hey, showcase this traction, this momentum, these third parties talking about this, these publishers, these industry experts, so on and so forth. Show that we've brought in 10,000 investors, 5,000 investors. I mean, it speaks very loudly. So yes, those campaigns can be easier to scale.
I don't know if you notice this one thing that we find stagnates the campaign is that there's no urgency on the investor side to invest, right? Because these campaigns are 12 months. If I come in month 1 or come in month 4, what benefit do I have in investing now or investing later? there's almost no change, right? Because the security is same cost. There's no difference in liquidity. So I find one struggle we have with some of the campaigns that we work on is when we talk to like investor, they say, okay, I'll invest, but not now. And then what happens is that then that lead lingers. It lingers, and then you end to a point when you go back to them, you double back to them, say follow up. They say, oh, sorry, plans have changed. So I think one thing that needs to be solved, and I may have a few ideas, but maybe we can talk about this offline, just to hash them out, is that we have to create some urgency, apart from the perks themselves or changing the perk, because then you have to get into SEC and FINRA approvals. But within the campaigns of how do you create that urgency so that they act now?
Yeah, that is a reason why someone would need to invest month 4, is if the round's about to fill up. I don't want to say closing messaging creates that fear of missing out, that immediacy. Outside of that, it's not necessarily coming from a place of scarcity, unless it's big picture of this will be your chance to get in at this valuation level. We basically want to paint the picture that this is a moving ship. It's going to the destination. It's hitting its milestones every week in the content calendar. We're talking about meaningful updates, growth, traction, partnerships. Here's where we were featured. Here's where we spoke. We're doing everything we said. In fact, it's happening faster than we thought. You want the investors to look to join in on that and get involved early. You want the retargeting, the touch points you guys are doing to be so present that, all right, this is on my desk right now, I'm going to move forward on it, I've thought about it enough, versus, oh, it's the last 2 days, we have to get involved, or the last $1 million, last 100K of the rounds available, better get involved now. Those things work, you just don't want to count on it, and most groups don't get there. So it's a matter of making it exciting enough, believable enough, because there's doubt for any startup of, hey, are they going to start a mid-market company, growth stage company, publicly traded company, like, hey, are they going to hit their milestones, quarterly, annual, before their next round, get to the liquidity events they're talking about, what have you. So the better you can tell the story, the more you could get the audience to want to be involved. I mean, we hear from investors at times, and you guys speak to a lot more of them directly, obviously. We wanted to invest in an AI company in, the influencer marketing market. I see influencers every day. Both markets are growing. I want to be part of an organization like this. I want to be a shareholder. I want to talk about it. They may be putting in $500. Are they going to retire off that? Probably not. Unicorn scenario, maybe, depending on their expenses. Who knows? But even, investors who are putting in 6 figures, it's fitting into a, high risk, high return section of their portfolio, and they're unsure whether it's going to amount to anything. But there can be other motives for them to become a shareholder in the organization. And if we could play to those early, could get real traction. I think also explaining, the why, what's your why, and how the use of proceeds is going to accelerate things, how investments today bring more audiences tomorrow, all play a role as well.
I think that's a very good point, because the why is important, but in this transactional campaign, it's why now. I mean, you just hit the nail on the head with saying that, hey, if the funds come in at this moment, it will allow us, because the business is still running, right? If at least, as long as, hopefully you have an issuer that's a company that has an operating business that's running concurrently to while they're doing this campaign to grow their business. So if they can share with the story and say, these funds that you give us now will help us get closer to the milestone, just like echoing what you're saying, I think that is that why now value proposition.
Yep. And the more the audience can have a rapport with the organization, speaking with folks like yourself, I think the quicker that could be accomplished. Manoj, we could talk for hours. I want to package a few actionable. I really enjoy the discussions. We're obviously doing similar things and fighting for the same goals, and really looking to see a higher success rate industry wide. I want to see more than the top 10% of campaigns moving. I want to see less than 50% of the campaigns that are not working. What tips would you have for founders who are perhaps running their own fundraise? What should they test out towards their model to see growth?
Well, I'm very opinionated. I've sat on panels and I've seen some things that they're not always positive. But like this line, the last time you and I were on a panel, I said, "Is your mother invested in your deal?" You remember that line?
Good
and
point.
what I mean by that is your mom, well, my mom loves me. That's the only person I know that unconditionally loves me for who I am and all my flaws and all my warts. So if there are people like that around your circle who trust you, get them involved. Because right then and there, they will be your first brand ambassadors. And in a unsophisticated way, you can now start building out a user profile and an investor profile. So many issuers I've seen, what they do is they start their campaign, they deploy some cash on marketing, and then they wait, and nothing happens.
Yep.
Right? And then they're upset. They're angry at you. They're angry at me. And then we'll say, well, you cannot control when the money's going to come in. You can control the effort, but you can't control the output. You control the input, but not the output or the result. So as a result, one way I think to kickstart it is before you even launch, reach out to friends and family, because that is allowed, and get them to pull some money aside. So put some money aside, and maybe let's say represents, if you're doing a $5 million raise, 10% of your total raise from your own network. And then a week in, boom, you have them all fill out submit their paperwork, submit the funds, and all of a sudden you see a big jump, like you talked about, creating momentum, creating excitement. Look, all of a sudden, within the first few weeks, you have a huge investment. And then now you create the FOMO effect. So that's one thing, sort of cheating, but it's fundraising. It's not purely crowdfunding, but you're still reaching out to individuals who hopefully have given enough confidence in yourself. They have confidence in you that you'll execute the supply that you have. That's one thing I would say. And also keep in mind, this is really hard work. Going back to that mother comment, those people that are close to you trust you because they know you well. You're now trying to reach out online to people who have no clue who you are. It takes time. It takes patience and takes consistency. Because some people, I believe you've experienced this a lot, deploy some cash, no money comes in, they get upset and then they stop doing it.
Yep.
Just because the funds haven't come in now doesn't mean they will not come in. You have to continue with the consistency. That investor, we talk about touch points, consistent of touch points could be on the marketing side, could be the outreach side, could be multi-point attack. That consistency is what is important. I think that's also another gap in what many issuers and founders don't realize.
Yeah. There's like this hurry up and wait where they'll hurry up to get their paperwork and filing done. They'll launch it, just like you said, and see what happens, when really time's the most precious resource in this scenario. So many companies hit their full cap last year, this year as well. So you want to throw everything at it and continue to have that thought process. Absolutely. What about scale? The campaigns on? Please.
Before we finish this topic, I just want to add an example I just remembered. We were speaking with a client, and their minimum investment was $99. And because they said, we want to have access to as big as the market as possible.
Bring everyone.
Bring everyone. However, their entire costing model was based on investors investing $500. And with the feedback, we spoke to the investors. Actually, we knew what our opinion was, but speaking to the investors, we were able to validate our point of view. Is that if you want somebody to invest $500, then your minimum needs to be as close to the $500 as possible. Because if you give somebody an option to putting 100, they'll still get the risk exposure, but with less capital.
Yep.
Right? Unless they truly love what you're doing, then they'll put the higher dollars in. But bulk of the population will do the least possible to mitigate their risk. So if you're giving them an option to put in $100, that's what you'll get. Your mean will be around that area.
Yep.
That's what, and so optimizing your price is a very, and they actually are. They refiled, and so that's why we're not working on the campaign at the current moment. We're waiting for them to get their approval with increasing their minimum.
Completely agree on the advertising side. If we're hitting $100 cost per acquisition, those are good advertising metrics. If the minimum investment is $100, we may see, less than a 2x return that week. You get some higher investments, people still putting in thousands, 100,000, it's going to look a lot better. But the most common investment you'll see is the minimum in our experience, at least on a Reg CF, commonly on a Reg A as well. So, can your audience jump up to 300? They're going to lose a lot of people. Can they do it at 5? I mean, that's a conversation that we have quite a bit, because it as you're saying, makes a massive impact on the average investment level. And
you're speaking about, sorry.
Yeah, go ahead.
No, you're mentioning about scale, so I wanted to enter the scale side.
Tips, examples from what you've seen from the biggest campaigns that you've been a part of.
The biggest campaigns we've been part of, there's been an existing community for those clients, for those issuers, meaning either they're a brand that a lot of people knew, like we're dealing with a client that was in the cannabis space. They owned 20 dispensaries. And so as a result, they had the data of people who liked their product. And what then happened was they went outright to them, and basically were able to get them a wave of funds coming in. They also this was a few years ago, so cannabis was so hot, and many of the publishers, financial publications, were still active. So the wave of their clients getting a financial publication came in, and this is before deploying even any media budget. So one way of scaling is by diversifying your sources, but you have to start off with a solid foundation, and they were able to build a solid foundation in their base audience based on the existing customer base that are already brand ambassadors. They already buy the product, they already believe in the product, and they want to be part of the company that created that opportunity.
Mm-hmm. Mm-hmm.
Or the other option is just throws more money to the problem, and hopefully the fire gets bigger. That's the way of scaling, right?
It's like you said, being able to look at that investor feedback and do more of what's working, going after those audiences that are transacting at higher values, going after audiences that are converting at higher percentages, and ramping and increasing and scaling from there.
Yeah.
Well, Manoj, you are a wealth of information. I work in the space and I'm learning. I'm taking notes as you're going here. I'm sure the audience is feeling the same way. Where can they go to learn more? And what are some closing thoughts you wanna leave listeners, viewers with?
Well, for me, now this is a mantra, and it took me many years to get over. It's like, just because you failed once doesn't mean you always fail.
Right.
Take failure as a learning opportunity and learn from the mistakes that were made. And hopefully the mistakes are small enough that you can pivot quickly. So until the point that you said that you're able to scale, because what is scaling? To go back to what you said about scaling, is establishing a foundation and building off of that bigger and bigger. So if you make mistakes, you may learn from them, correct them, pivot, and then you can scale. So please be open to learning from your mistakes. And if you do make mistakes, there's nothing wrong. Everybody does. Mm-hmm. And that crowdfunding is really hard work. And have patience. And therefore that allows you to set proper expectations. To learn more about what we offer, the best source is our website, which is www.publicyield, publicyield.capital, CAPITAL. I'm one of the few people that always picks up his phone or email. So Would you like me to give them my email as well? They could shoot me a message and then
Sure.
take from there. So my email is Manuj, my first name, MANUJ @publicyield.capital. And Jason, I want to say once again, thank you so much for letting me on your podcast. It's pretty awesome. I always enjoy talking to you and especially on the panels and getting to see you face to face. So thank you for the opportunity.
My pleasure, Manoj. It's been great. Thank you for making the time. Again, you are a thought leader in the space. Few are able to do what your team is conducting and producing on a daily basis. We want to get the insights out there for everybody and highly encourage everyone who's tuned in to get in touch with Manoj, take them up on that offer, have a conversation, and I'm sure you'll get some learnings out of that regardless of where it goes. But if you have the opportunity to bring them on, would definitely recommend it.
Thank you.
Well, thank you, Manoj. Again, appreciate the time. Had a blast on today's pod. Listeners, viewers, want to thank you for logging on today and checking out this episode. We'll see you all next time. Take care.
Thank you.